So, advanced market structure in under 10 minutes. Now, the reason I'm focusing on this is because I get asked so many times to cover this topic. Now, again, with everything that I'm going to be talking about in this video, I'm going to try and be keeping it as short as possible and straight to the point. I don't want to waste your time at all. And, I feel like there's a lot of gems that we can learn here. Now, in terms of technical analysis, again, there are a few components, but the key ones that we must always look at is, first of all, is going to be our market structure. Secondly, we've got liquidity. And then thirdly, in my opinion, it's supply and demand. Now, again, if you are a different type of technical trader, this supply and demand will obviously be turning into different retail concepts or whatever. But again, it's almost always the same thing. As soon as you've got a great understanding of market structure, you can pretty much know where the market's going to be moving. Again, there are a few other things to factor into here, like fundamentals, but that's a completely different ballgame. And obviously, that's something I cover in a lot more detail at other times. For now, though, we'll just be looking at this in a lot more detail. Just looking at market structure. Now, what do I usually look at, especially when we're getting into it? The thing you must understand about any technical analysis is this: market structure comes in two ways. The first way is going to be we're going to be moving in trends. And the second option is we're going to be moving in consolidations. Now, again, why do we look at just these two types of market movements? Is because that's all we pretty much get. Remember, the market is always accumulating and distributing, accumulating and distributing. This is very, very simple. As soon as we get these accumulation phases, these consolidations, at some point we're going to expect for price to distribute outside of this area. Again, when you look at distribution phases, we eventually get into consolidation phases. This is how the market moves. It doesn't move in a solid straight line all the time. At some point, it has to pull back. Now, our key point here is understanding where it can pull back and at what times and everything like that. Now, when we look at our technical analysis, there's a few things that we need to understand. In SMC logic that we do talk about, it's going to be very simple. We either have continuations like this, and when we do have them continuations, we simply have continued break of structures. Now, this is pretty much, when this happens, we can basically confirm that we are still moving in the direction of the trend. So when this does happen, you can feel certain that, okay, we are still moving in this direction. The point at which our primary structure is broken, that's when we can understand that this is a change of trend. Now, again, once we get a change of trend, we can understand that, from moving it from buys, we can now start to look for sells. This is very, very simple. However, when we look at this in more detail, we're going to understand, just how much of a difference it can actually make in your trading. Now, when you look at any chart, you need to understand, of course, these things. You've got breaker structures, you've got change of characters or change of trends, as we call it, to the other side. Now, one key thing that I will add to this, and in my opinion, what makes this a bit more advanced, is how do we actually react around these primary structural points. Now, there's a few ways, and in my definitions, I would look at it and classify it in two ways. The first way is going to be body closures. The second way is going to be wick closures. Now, what do I mean by this? Simply looking at it like this. So let's just say, for example, we have a low over here. Now, imagine for the next few candles, we started to get something like this. The next candle, and then the next one as well. If this candle that actually broke the low, as you can see over here, if that candle over there actually broke the low with a body closure, that's when we can be sure that, okay, price is pretty much giving us an indication that we are going to be moving to the opposite way. Now, that's the first way, the body closure. When we are looking at the second way, it could be a wick closure, right? So essentially what that is there's a small body formed. The wick is pretty much, it consists of most of the actual candle. So it could be a split like 25% body, 75% wick, something like that. As soon as we get that, this is pretty much what I would classify as a weak change of character or a weak break of structure, whichever way you're looking at it. That's something that we definitely need to incorporate, especially on the lower time frames when we are looking at stuff like this. It's going to be very key. But for me personally, it applies more on the higher time frames. The reason is because when we go on the lower time frames, at some point, we are always going to get a very clear break of structure or a very clear body closure in one direction, right? But when we're looking at the higher time frames, that's when it makes a lot more sense. And of course, it carries the most amount of volume within that candle, because of course it represents an hour. Let's just say on the 1 hour candle. Now, just getting into charts, how do I understand market structure, just in the just on the charts in general? Now, I can take any blank chart over here. Looking at Euro USD over here. Of course, I do trade Euro USD a lot more because I am more concentrated on just Forex pairs. But just taking a look at any asset class, whether it be US 30, whether it be gold even. 3 different types of asset classes, but the analysis remains the same. So let's just take a look at this example over here. Gold. So whenever we are moving in the trend, of course, as you can see, and we've been moving in the trend for quite a while, to be honest. Oh, wow, and this analysis has hit really well from ages ago. Obviously, it's a shame I don't really trade gold that much, but yeah. Whenever this happens, what do we expect? So just taking a look at the market over here, for example. For a while, we were moving in a bullish direction, right? As soon as we had this low over here form, price is pretty much starting to move to the upside. Then what we basically look for is any primary structural low that is broken. That is when we can start to consider any sells to the other side. So let's just say, for example, over here, we were at this peak. And you could say that up until here, this was probably the last break that we had below any primary structural low. But up until here, this was the only one. As soon as we had that, as you can see, a very, very clear body closure just below. And as soon as that happens, what can we understand? Now we basically can plan for sells in a way. So where do we actually look for these sells? For me personally, I always look for something that's in a premium or a discounted area. So just as an example over here, I would set my fib retracement, put a 62% fib retracement on here, and anywhere within this zone over here, as you can see, is where I would be looking for my optimum sells. Again, as you can see, very, very clear sells over here. Came into that 62% fib retracement and then started to sell off. Now, the key here is, yes, we understand market structure. We've had that clear body closure beyond that primary structural low. Then we start to look for a retracement within this kind of area, that 62% fib retracement. And then it's basically up to us to decide where are we actually going to take our entry. Now, if you really wanted to take a conservative approach, you could do something as simple as this. Entry on the 62% fib and then stop loss just above the high. This pretty much relates to my 4-hour strategy. But when it comes to my actual elite strategy, that's basically where I'd start to go on the lower time frames. I'd mark out my points of interest. So one of them for me would be over here. The other one would be up here, for example. Again, we could argue that this fair value gap is quite solid as well. Again, when it comes to all of that, for me, it really doesn't matter what the point of interest looks like. It could be an order block, could be a fair value gap. What matters for me is my confirmations. And again, when it comes to my elite strategy, I am on the 5-minute time frame. I do take my 1-hour point of interest and I do look at the trend, for example, but it's on the 5-minute time frame that I do mark it down in a way. And so just a quick little side note for those of you that really want to take their trading to the next level. The one thing I always recommend to my students is backtesting and journaling. And the one place I personally use for all of this is Trader Edge. So this software gives you all the access to every single backtesting feature that you need, a whole strategy tester to allow you to put it into different libraries, a calendar, which I believe is actually one of the most essential tools to accurately track your trades and see your progress over time. And one of my personal favorites, the forward testing feature, which allows you to project how a certain strategy will do over time. So if you want to get started with this, click the link in the description to access one of the most trusted backtesting softwares there is available. But anyways, that's besides the point. We're not really looking at the details of everything right now. We're basically just looking at market structure. Now, in my head, what I usually do at this point is I say, okay, if, for example, we've now broken primary structural lows, we're having a retracement up and we can start to look for sells. If I wanted to look for more sells, I would pretty much wait for the low to be broken even once more. Once that low has been broken, as you can see, this one was a wick closure. So for me, I possibly wouldn't have entered at that time. But it's at that point that now this is your new range. So as you can see over here, this would now be your new range. And the reason I say that is because this range has already been completed. Now we've had that pullback, that continuation, that breaker structure just below over here. And now pretty much we are going to be looking for entries within this kind of zone right here. And as you can see, when price kind of pulled back, it didn't pull back all the way up to the top. So again, when it comes to your market structure and the way you analyze the markets and everything, it's not going to be forming every single time, coming back to that retracement. But the key thing we want to understand here is can we actually tell where the market is going to be moving? Now let's just continue. As you can see, price continues further down, further down. We get this price pullback over here, but essentially doesn't break above this primary structural high, as you can see over here. If, for example, it did break that point, that's when I can expect price to go up, pull back, and then something like that. So again, remember, it always comes back to our primary or our fundamental technical analysis. Are we breaking these important highs and lows? Once we break these highs and lows, how do we actually react around these areas? Is it a full body closure or is it just a wick closure? That is also going to be very, very important, because if we get wick closures, we can expect that price might continue again to the upside. Now, just looking at this example over here, as you can see, price really started to break up above this point over here. And then pretty much we got a few little examples of where we can continue to look for buys. But then eventually price really started to pull back down. Again, you can even turn this down onto a lower time frame. Still, a 1 hour primary low over here was broken. And as you can see, a very clear body closure. Once that happens, we basically wait for the low to be created, a little push up above. We set our fib retracement on this kind of area. As soon as that happens, we basically start to look for sells in this kind of zone right here. So again, it is going to be the leg that pretty much broke this piece of structure over here. Some people could argue that it would be this kind of area over here. But again, that's the thing with market structure. It can be quite discretionary, and that's why people really do mess up on it at times. But yeah, just taking a look at this example over here again, we've broken this piece of structure. I don't even know where price is moving on to on the right. My guess is it's going to be if we've broken this primary high over here. If we've broken this primary high over here, I'm pretty much going to be expecting that we're going to be moving into a discounted area. So anywhere for me in this kind of zone would be amazing. And did price eventually do that? Yes, as you can see. And eventually price just continues to the upside. So again, if you really do want to incorporate this into your trading, it is very, very simple, but it does require a lot of experience. You know, I've been doing this for quite a while now, and obviously I've been mentoring, a lot of people. And again, over time, I understand these types of things. But guys, just keep this as simple as possible. You can apply it to every single market. It's all about your primary highs, your primary lows. Are they being broken? Then you've got your two steps. Is it a body closure? Is it a wick closure? And then at that point, we can expect that price will pull back into the premium or the discounted area. And then at that point, that's when we can look for continuations. So yeah, it's as simple as that, guys. And if you have any questions, obviously leave them down in the comments below. Please leave a like and everything. And then I will see you all in the next video. Take care.